Hello folks, this is Daniel Bennett from Advanced Portfolio Strategies with an educational economic update for October 2017. In this month's video, I'll discuss some of the major headlines that influence markets in September. I'll also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. As we enter October, the third quarter of 2017 is now behind us. While we still have to wait to receive most quarterly data, one detail is certain. Major indexes performed well between July and September. The S&P 500, Dow, and NASDAQ all had positive performance last month and gained at least 3.9% for the quarter, and they're each up 9% or more in 2017. With all of this growth, we've seen indexes hit a number of record highs, and the quarter's last trading day on September 29th was no different. Both of the S&P 500 and NASDAQ closed with new records, with the NASDAQ reaching new heights for the 50th time this year. The Dow closed only 0.1% away from its record high and notched its 8th straight quarter of gains for the first time since 1997. The S&P 500 also ended the quarter up for the 8th time in a row, and the NASDAQ had its 5th straight quarter of gains. Between the recent weather disasters and geopolitical tension, last month's positive market performance might seem a bit surprising. But rather than mirroring this volatility, markets were relatively calm. In fact, the S&P 500 had its least volatile September in history. Now we will look at what happened last month and what may be on the horizon. Right before the end of September, we see the final reading of the Gross Domestic Product, or GDP, a critical measurement of the economy's growth. The data showed 3.1% growth in the second quarter of 2017. This reading slightly beat expectation and indicates the economy is growing faster than many people expected. In addition, the latest readings of personal income and consumer spending increased. The services sector also showed growth, with 5 of 18 industries in the ISM non-manufacturing index having positive readings. And after struggling for years, corporate earnings seem to be back on solid ground. Last quarter marked the first time in 6 years that corporate earnings had 2 solid quarters in a row. But the economy still has room for improvement. Industrial production and retail sales fell in the most recent reading, and the Fed's preferred inflation indicator, the PCE, once again showed that inflation is far from the 2% rate that the Fed hopes to see. Nonetheless, the Fed has stated that it plans to raise interest rates 4 times before the end of 2018. If inflation remains low, they may have to rethink this plan. One change the Fed will be making is to begin lowering their massive balance sheet this month. During the Great Recession, the Fed plunged trillions of dollars into the economy. The Fed now believes the economy is strong enough to handle more normal monetary policy. So far, the markets haven't had a strong reaction to the Fed's long-anticipated decision to reverse its so-called quantitative easing. But we will continue to monitor this action and a variety of other economic indicators throughout the rest of 2017. Looking ahead, many potential changes could be on the horizon, including tax reform. We are studying how any policy or economic updates could affect the markets. For now, if you have any questions about anything in the news or want more guidance on balancing your finances, we are here to talk. That wraps up this month's educational economic update. Here are some upcoming events that we'd like you to know about. Monthly happy hour on Wednesday, October 25th from 5:30 at Absolution Brewing Company. Once again, this is Daniel Bennett with Advanced Portfolio Strategies signing off for the month of October 2017. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 310-776-6549. We are happy to talk.